Thanks so much for tuning into the Trade Setup with me, Niraj Shah. It's a red letter day, but before we get to the business, just a quick take of whether did you know this statistic or no, that China's global car production has soared from 1% 20 years back to 40% nearly. 40% of the global production, car production happening in China. Gone are Detroit and Stuttgart. So US and Germany are not in the picture. Maybe even Japan is not in the picture. In fact, a lot of these have lost market share, if you will. This is from a global publication and pretty interesting. These statistics may be a bit here and there. Maybe it's not 40, maybe it's 35 or 33. But effectively, Chinese share has gone up meaningfully. Very interesting statistic, really. Okay. Let's get to the big news, right? So what's happened overnight? Fed has cut rates by 25 basis points, which is fine, but they've sounded caution on the pace of rate cuts, and which is why the Dow took a smashing in trade yesterday. Though it's been down for 9 straight days, this is the 10th straight day. And of course, Dow down for the 10th straight day. The 10-year Treasury yield has leapt to about over 4.5%, 4.51 as we speak. So that's the other aspect that should be keeping in mind. And the dollar's strength has sent gold and Bitcoin tumbling in overnight trade. Bitcoin is now back to clearly $1 lakh. Gold was down about 2.5% as well. So that's what's happened. In other news, Hong Kong records the first rise in new listings since 2020. Is the China stimulus bringing about optimism for new listings? That's the key thing. Nevertheless, this is what the US markets did. Futures marginally in the green. Let's see if this is any respite, but Asia should be a sea of red. No surprise. We've corrected quite a bit already, but I reckon we would have a tick of red today. Well, 343 is not a tick of red. It's a very deep gash of red. Let's see if indeed there is some bit of bottom buying that happens here or no. But viewers, I hope all of you remember, since the last 2 days, we've been saying that stay away from leverage longs, stay away from leverage longs. I hope that advice was of some use. I mean, effectively, just looking at quant indicators, overbought positions, higher wicks, it just seemed obvious that it was better to stay away from leverage longs. Even now, I do think that while we'll start off with the gap down, it's better to stay on the sidelines than buy the dip. I think things are not completely clear as yet. The world markets, maybe the Dow futures are in the green right now, but things could be different once Europe opens for our markets as well. So that is the first thing. I do think that there might be a tech correction today, and it may not get bought into almost immediately because the Fed commentary is of this nature. It is very, very hawkish for now. Of course, paint companies may continue to have some corrective moves as well because of the Asian Paints exits. By the way, just one small deviation on other things. Citi, for example, says that while the Fed commentary is very hawkish, they believe that the soft labor market will keep the Fed cutting at a faster pace, and they expect a sharp, dovish pivot from Jerome Powell and the committee in the next few months. So while we'll have a gash, let's see if this improves. Okay, it's a big day for listings and IPOs. 5 new IPOs opening today. I don't remember the last time I saw 5 IPOs opening at the same time. DAM Capital, the most prominent one and the most famous one, but Transrail, Sanathan, Concord, Mamta Machinery, various sizes out there. Watch out for all of these. Could be very interesting, and kind of primary liquidity they suck out of the system could be interesting as well. Remember, while the sizes of the IPOs are whatever they are, the quantum of subscription will have an impact on the secondary market liquidity. Also, Inventor's Knowledge Solutions subscribed about 52 times. Listing today, bad day to list, but maybe might actually do well. So let's wait and watch. Stocks to watch today. The first one is Enviro Infra. This has had a mammoth uptick the last few days. Now the results are living up to the billing. 77% uptick in revenues. Margins expand. Bottom line, 200% higher at 36 crores versus 12 crores. Watch out. I've given it a thumbs up. It was down 10% yesterday. Let's see if there is an uptick today because of the results or no. So that's the first one. Then Dolphin Offshore should have a negative day because the CEO, no less, the CEO has resigned due to personal and professional reasons. This should bring about a stick on the stock. Let's see if this one reacts. How negatively? I would presume negatively. Asian Paints has already had a few dull days, but 2 key executives have resigned, citing personal reasons. Remember, I mean, it's the VP of Home Decor and Services and VP of Retail Sales and Marketing. So key executives, yes, not managerial positions, I presume. I don't know the extent of the cut, but let's wait and watch if Asian Paints has a gash today. Zaggle, I've given it a thumbs up because the demand for the QIP seems to be strong, but a 450 crore QIP launch with an upsize option as well. I suspect that post the QIP, the stock could do well, but the market is iffy today, so don't quite know what will happen. FDC and Gandhar Oil have received US FDA approvals of various sorts. So FDC, US FDA not for the ANDA application that they had done for Cefixime 400 mg tablets, it's a positive. And for Dolphin Offshore, Gandhar Oil rather, the US FDA has closed the inspection on the Taloja facility. They have said it's a voluntary action initiated recommendation, which is the lightest form of reprimand, if you will, there to take some voluntary actions and things are okay. So watch out, Gandhar Oil could actually have a good day too. Shopper Stop, I've given it a thumbs down because Amazon has exited, or rather has sold some of its holdings, 3.99%, even though the mutual funds that have bought in are marquee names out there, SBI Mutual Fund and a few others. So watch out for Shopper Stop. Watch out for Yasho Industries. It's a small cap chemical company, but they've raised 125 crores via private placement at 1900 rupees per share. The key is the shares have been allocated to some marquee investors, Malabar India Fund, Ashoka India Equity Investment Trust, and White Oak Capital. Malabar is Sumit Nagar's fund, small cap specialist. White Oak, Prashant Khemka, Ramesh Mantri, very smart set of investors have gotten into it. Let's see if it reacts positively. And Gopal Snacks has been having a tough time since the fire. Now MK has come out and said that the high palm oil prices impact sales and margins, and they have cut their earnings 37% for FY25, 18% for FY26. FY27 is far away, but at least these two get cut, and therefore let's see if there is a further gash in Gopal Snacks. Their target price, I think, is maybe 575 or thereabouts. But anyways, a gash in earnings. Let's see if it brings about a gash in the stock. Thanks so much for tuning in. Brace for some impact. Let's see if that gets bought into. I would suspect staying on the sidelines might be a better move.